Hi everybody and welcome to the London Session Update on Monday the 14th of October 2013. Well, it's a bit like Groundhog Day really. There was some hope on Friday that we would get a resolution to the debt debacle going on in the US, that they would raise the debt ceiling, but yet again we've gone past another weekend's deadline and they still haven't. So at the moment the US government has been shut down for the last 2 weeks and we are a mere 3 days away now from the US hitting the debt ceiling. By Wednesday, the Treasury has come out and said that they will not have enough money to pay their bills. That will require some shuffling around, unless, of course, they reach the debt ceiling. Well, how are markets reacting to that? Well, it's been kind of an interesting one because although hitting the debt ceiling is terrible, of course, it's not a way that a functioning government should act. Really, from a default position or from a credit rating downgrade position, Fitch came out at the end of last week and said no, that wouldn't automatically trigger a rating cut from Fitch, which still has a AAA rating on the US, but it would over a period of time, and it only would trigger a downgrade if the US didn't pay their interest or principal on Treasury notes, bills, bonds, etc. So it's still a bit complicated what would actually happen come Thursday once we've hit that debt ceiling. But it does seem like maybe it wouldn't be the apocalypse we would expect, and if we only went over for a couple of days, that would certainly do detrimental and reputational damage to the US. But in terms of practical terms, the US wouldn't be labelled a defaulter, because remember, to be labelled a defaulter, you have to have a willingness not to pay. Now, the US does have a willingness to pay, it wants to pay, but it's this political issue that's getting in the way. It also has the means to pay, of course. The US is still the richest country in the world, so for it to go over its debt ceiling, it's slightly different from what we've seen in the past. But needless to say, the markets are still very rattled by it. And just because the credit rating agencies won't necessarily cause the US or downgrade the US, doesn't actually mean that the markets aren't taking things into their own hands. Now, where we're seeing a lot of sentiment about this debt ceiling issue is in the gold price. Remember, if the US doesn't reach a deal and we go over that debt ceiling, then we could see gold be used as a real alternative to a reserve currency, and that should put upward pressure on the gold price. However, as the market still continues to think that an 11th hour deal will be made, hence why we've seen this real kind of volatility in gold, and it does remain below 1300, which is key. Now, on Friday, on expectations that a deal, even a temporary raising of the ceiling, was in the pipes, that caused gold to fall so sharply that the COMEX had to halt trading at one point because a circuit breaker kicked in, which basically halted trading for 10 to 15 seconds just to try and stabilise the market. Now, we have stabilised today. We are back above 1275, my apologies, but we still remain below that 1300 level. The closer we get, the 1283 is the 50-hour moving average, and then of course that 1300 level comes in. But for as long as the market does expect a deal to be done, we expect any strength in gold to be faded by the market. Now, we're also looking at equities, of course. Remember, today is Columbus Day in the US, so Treasury markets are closed. Let's take a quick look at the FTSE 100. The one thing, the anomaly of this chart you may see, is that it's actually been going up. Just the last couple of sessions, obviously the FTSE has been under pressure, but we are seeing the FTSE underperform other European indices today, which have opened much weaker. But the main reason why the FTSE is doing well, there's a couple of reasons. Number one, we did get over the 200-day, get above the 200-day moving average, which was a bullish development. We're currently getting stuck a little bit between that kind of 6,480, 6,510 level. That is a key resistance zone. So we are watching that quite closely. But also because there's been some good corporate news out of the UK. Royal Mail shares, they went live on Friday. They continue to rise. Now, from Tuesday, investors can actually start selling them. But with prices at this high, we may get some selling pressure. However, it does suggest that there's real buying interest there. So it looks like domestic factors are boosting the FTSE, and it's just being able to prove a little bit resilient to what's going on in the US. However, if there's still no debt deal, we do think the FTSE will come under pressure. So that's something else to watch outside of the US. But thanks for joining, everyone, and please do join us soon for more. Bye-bye.